SoFi stock flies and then dies today after they reported Q2 earnings. Is it time to finally sell the stock after this recent run up? What's next for the stock? What did I like about this earnings report? What did I not like about this earnings report? We're going to talk about it all today. Let's get into the video. What is going on, everyone? If you're new to the channel, my name is Jason, and oh boy, what a crazy day it was for SoFi stock. You know, before the earnings got released, we were around 21 bucks per share, and then whoof, we shot up to almost $25 per share. And then OMG, we sold off and all the way down to 22 bucks a share. Crazy, man. We were up, nearly 20% at one point during the trading day, and we closed like what? Up like 5 to 7%, somewhere in that range. Just for some clarity, guys, I do own around 6,000 shares of SoFi. This is my baby little Robinhood account. I think there's 300 shares in here. But altogether, we own around 6,000 shares. Thank you guys so much for tuning into the channel. We're going to get into this earnings report, and I'm going to let you guys know whether or not I'm selling my shares, I'm holding my shares, I'm buying more shares. Let's get into it. Don't forget to hit that like button and subscribe. It really helps us get into YouTube's algorithm. All right, SoFi investors, let's kick off this investor presentation Q2 2025. Continuous innovation and brand building, man. The brand it hasn't looked any better, man. It really, really hasn't. We're almost at 12 million members right now. We just hit in 2024 10 million members. They partner with the Rams, the Chargers, official banking partner of the NBA, the G League, NBA 2K. They presented at the CMA Fest. I mean, it's great. The one-stop shop for digital financial services. We went over this in other reports, so I'm not going to get into all this stuff. Let's get into the good stuff, the nitty-gritty here in Q2 2025. Members, guys. Almost 850,000 new members added here in Q2. 34% year over year. And if you watched my video, we wanted it to be around 850,000 new ads. It was right around there. Didn't surprise too much to the upside in my opinion. But dude, the consistency at 34% year over year, quarter after quarter is extremely, extremely impressive, man. 11.7 million members in this ecosystem, guys, is nothing to sneeze at, man. And look, Q2 2025, 17 million products. It's great. Year-over-year growth, 34%. The numbers are great, guys. 1.2 million new products. We're looking really, really, really good. I'm very, very happy with what we've seen so far. And if we look at the durable growth slide here, adjusted net revenue, looking really, really good. 2025 guidance, it's looking great, guys. It's absolutely looking great. So in this blue right here is year over year growth, 44%, 44% net year over year adjusted net revenue growth. Amazing numbers, guys. Amazing! Adjusted EBITDA, $249 million, guys. That's great. Absolutely great. Absolutely great. 29% margin. Epic, guys. Absolutely epic. Adjusted net income. They're guiding, 370 million, right? 97 million here. Very, very respectable number. A lot bigger than last quarter, right? As we can tell by this bar graph here. Listen, 11% margin. I'm happy with that. I like it. I like it. Diversified revenue stream. The fee-based revenue, guys, is a huge, huge deal. They're annualized $1.5 billion. Year-over-year growth, 72%, man. It's still growing at a huge rate. I mean, the numbers we're comparing to in 2024 aren't monster numbers because it was still in its infancy. But as you can see, 2024, we're not comparing against 2023, right, when they were real babies. So I'm very, very happy. Look, fee-based revenue compared to all other adjusted net revenue, 44% of the business, guys. It's really, really impressive how much of this fee-based revenue is taking over the general, revenue mix here, guys. It's really, really impressive stuff here. I love it. Long-term approach, adjusted EBITDA margin, growing and growing and growing. They're balancing profitability with significant reinvestment back into the business, right? I love that. So we're still growing. We still have enough money to grow the business and reinvest in the business and pay off the little amount of debt that they do have. I like that as well. The returns, adjusted earnings per share, guys, of 8 cents. Really, really, really nice. Really, 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 really nice. I like it, man. I like what we're seeing here. Tangible book value continues to increase year after year, quarter after quarter. Guys, remember these numbers are in millions, right? Really, really nice stuff, man. Strong returns. Financial services segment, net revenue. Really, really, guys, look. Net interest income primarily generated through deposits and credit card loans. Here in the dark blue, the light blue is non-interest income, including fee-based revenue generated primarily through loan platform business referrals, interchange, and the brokerage. The contribution margin and profile improving and getting better and better and better. Quarter after quarter after quarter, we continue to see contribution margins and profits increase. I like that. The loaning platform is great. This is kind of like the balance sheet, what they keep on their books, they sell the loans, the secured financing, loan platform business, LPB referrals. This is like their mixed bag of all the different capabilities for this lending stream. Capital markets activity, regular loan sales, and scrutinizations help manage the balance sheet. Sometimes by selling these loans to other companies, taking the fees, getting that fee-based revenue, we like that. We don't have to keep it on the books long term and then have to worry about the risk that comes along with that. The lending segment, 32% year over year growth. Contribution margin and profit is a little bit on the downside here. If we take a look at the contribution margin and the contribution profit continues to go up, but the margin's slightly ticking down. All right, guys, let's take a look at the lending originations. Something to get really, really excited about for me, just taking a quick glance at this, is the home loans. I think there is a huge runway for growth for home loans, and we can see that already. That, Q1 in the dark blue, in this SoFi blue here, significantly more money, man. Just take a look at the bar chart. They're looking really, really good with home loans. I think that's a huge part of the business that's going to continue to grow and grow and grow and grow and grow. So student loans came down here a little bit in the second quarter, right? That's common. Okay, so next quarter, we want to see that tick up as the new school year is afoot, right? And then the personal loans, guys, here we go. Second quarter originations compared to the first one. Second quarter LPB originations, all different kinds of stuff here. Down a little bit slightly from Q1. Consistent credit performance, personal loan credit performance looks good. Everything, the tech platform. I spoke in a video earlier. I wanted to see an uptick in net revenue, and that happened. 3 quarters of stagnation. Now we got a little bit more. A little bit more money's in the banks, guys. I absolutely love it. 15% year over year growth. Remember, this is in millions, right? So I love that. I love it, guys. The net revenue from the tech platform ticked up finally, right? I'm very excited about that. Contribution profits up from Q1 to Q2. And it's the margin is stable at 30% because we made a little more money. That's why we see this uptick here in Q2 2025. So everything that I kind of discussed, we didn't really get a clear-cut timetable on when crypto is going to be back on the platform. They say later this year. There wasn't a definitive date. Out of all the things I talked about in previous videos, that's the only thing I wanted a little more clear evidence on. In the tech platform, we saw a little bit of growth. 15% year over year growth is, I could deal with that. 10% and less, I don't love that. I want to see this in the 20s in the near future, right? But I think home loans is going to be huge. As interest rates go down, Powell says that we're probably going to get like 2 interest rate cuts. That's what they're predicting. We'll see what Jerome Powell actually does. But as those interest rates go down, refinances are going to happen, more mortgage opportunities for SoFi. But all in all, I'm really happy with this earnings report. That's why the stock shot up huge. And then it sold off during the second half of the day. People are taking profits, right? There's been a huge run in the stock. So what am I doing with my shares? Under 20 bucks a share, I'm going to start nibbling. Right now, I'm selling cash secured puts, selling some covered calls, kind of doing some straddling action. And then whatever premium I get from selling the cash secured puts and the covered calls, I'm going to buy a couple shares here, a couple shares there. But I'm not in a hurry to buy shares right now, especially because we've seen this huge sell-off in the second half. I don't know if this continues into the weeks ahead. We got to keep our eye on that for sure. But I'm excited. If I get to buy SoFi at cheaper prices after this blowout earnings report, I'm cool with that. You probably should be cool with that too. Remember, this is not financial advice. This is just what I'm doing with SoFi stock, what I see in these numbers. Be careful out there, guys. Do your own research. And if you like SoFi content, more stock market content, make sure you hit that like button and subscribe to the channel.